Morning everybody, Mike Niemiec here. It's a Friday, June 22nd, with some early morning grain and oilseed comments. Well, after yesterday's demise, we rebounded in the overnight trade. We're up roughly a dime across the board for corn, wheat, and beans, up around $4 per meal, maybe unchanged to slightly lower for the oil. But once again, even with yesterday's demise, we are still sharply higher for the week in a sense that we're up roughly around 50 cents in wheat, beans, new crop corn, maybe in the neighborhood of around $15 in meal, and maybe around 150 points in the soybean oil. The only market that's been somewhat laggard has been the old crop corn, and that's kind of permeated the marketplace yesterday. There were reports of basis levels in the interior for corn, which are still kind of stout, being cut in half, and that kind of liquidated even more of the corn open interest yesterday, which has been of trend. We continue to see the demise of open interest in the corn market, and that was again yesterday, be it in the neighborhood of around 20,000 contracts. People are not embracing a corn story. If you want to talk about weather, what people are embracing, but even to a minute degree, is still the soybean complex, with the open interest in beans and meal up a little bit in the yesterday's trade. If you want to talk about weather, we had our front come on through. The rains came in light amounts in the eastern corn belt. They are the problem area of the growing region. It has cooled on off. Extended forecast looks like it's going to remain somewhat cool, but there's not much in the way of moisture relief coming to the quote-unquote top subsoil moisture deficits that we are currently experiencing in the eastern corn belt. Thus, crop ratings are expected to continue to be on the defensive and be supportive underneath the marketplace. So having said the weather, once again being somewhat supportive, we look at the main ingredient as far as open interest goes. Today is option expiration, and a week from today we're going to have a very important USDA report, acreage and quarterly stocks. Thus perhaps the end of the month, end of the quarter, the report and or option expiration, the demise of open interest that we've been seeing in the corn market, unlike what we're seeing in the beans. I understand that we have cheaper corn prices in South America and in the Black Sea. I understand ethanol margins are on the defensive as far as giving us a boost in the corn versus what we're seeing as far as weather support, but once again, nobody's really embracing it. Where the most immediate important story continues to lie in the soybean meal complex, where we continue to see the South American basis levels improve, even though they've harvested and or been moving their crop, and as a result we continue to see business come to the U.S., and as a result we continue to go and keep our carryout levels on the defensive, and that's not even talking about what weather can bring ahead. So anyway, we're looking at a little bit of a better start. It's the end of the week, and once again, these are the opinions of myself, not ADM or ADMIS. Thank you.